Welcome back. I'm now joined by Philip Newman. He's Managing Director at Metal Focus, and Michael DiRienzo is Silver Institute's Executive Director. Gentlemen, thank you so much for joining us. And what a start to this year when you look at gold prices. So, Philip, the first question really is to you. So, while we are trading at an 8-month highs in the international markets, India has been making all-time highs for last 4 or 5 sessions, including today as well. How do you look at the currency play, and what's your sense on where the gold prices are headed?
Well, I think you there's some very good points there, and of course, if we look at the dollar, it's now on a trade-weighted basis, back to levels or down to levels that we last saw in June last year. And so I think that is certainly one of the key factors that is helping, I think, to support gold prices. And of course, part of that relates to the interplay with other key central banks. We've obviously had comments. Very recently from the ECB looking to lift rates and maintain rates higher for longer. And that sort of sits against market expectations, at the least, that the Fed will start to adopt a much more dovish stance, hence why we've seen the dollar come under pressure and therefore supporting gold.
Oh, absolutely. And what a strong run-up. Apart from central bank buying, as you said, the currency clearly has a bigger role to play here. Michael, hi. And even as everything has it working for silver prices, and last year was a good one, but the start for this year hasn't been so great. What do you put that to?
Well, look last year's average price was around $21.90, and right now we're averaging $23 for the first, 3 or 4 weeks of January. So we're quite optimistic about the silver price in 2023, and we think the fundamentals are strong, which will lead to a higher price throughout the year.
Michael, a major buying clearly seems to have come in from India, where we've imported record quantity in 2022. Do you see that pattern repeat itself in this year?
It very well could. Look, we're actually coming to India this year, the Silver Institute. We're doing a conference in your great country in late April, and we'll have more information after then. But the conference will include fabricators, jewelers, end users, miners, and so forth. And I think it's a perfect time to come to India. It's the inaugural India Silver Conference in Jaipur in late April. And quite frankly, we think that there'll be some good news coming out of that conference. Thank you.
All right. Philip, are you joining Michael for this conference in India in April?
I will be in New York with Mike just before that. But we've got, a fantastic team based in Mumbai, as you know. So Metal's Focus will be very, very well represented at the conference.
All right. We look forward to all of that. So, talking back to gold yet again, Philip, what's your sense? Because it really is a divided street on where the gold prices could be headed. As Ol from Saxo Bank was telling us that they expect the gold prices to continue to run and perhaps make all-time highs as well. And that is what at least 70% of banks and brokerages believe. What's your own sense?
Well, I think from our point of view, the key issue is that market expectations, that I mentioned earlier, is that the Fed will take a dovish stance much sooner rather than later. Whereas if you look at the Fed dot plot, it's saying that the Fed will maintain rates higher for longer and may not start cutting, either they'll wait until very late, 23, or perhaps only do so in 24. So you do have quite a dichotomy between what the Fed is saying and what markets expect. And so from our point of view, we think that the Fed will maintain that sort of that strict policy going forward. And so as we go into the back end of 2023, you're going to have a scenario of inflation falling very clearly and quite significantly, the Fed maintaining rates, and therefore that suggests that real rates will increasingly rise. We think this will gradually be supportive for the dollar. And so those two will act as, I think, considerable headwinds. We could therefore see liquidations by investors in the back end of 23. And so from our point of view, as it stands, we think that prices will weaken during the second half, perhaps falling to around the $1,600 level. Now, I know that's not a consensus view, but that's where we probably think that the prices will head.
Oh, we do get the possibility of that, Philip. It was September that we were trading around 1600. We're trading at 1900 right now. So, well, yes, getting used to that volatility. But also talk to us about the physical buying. And Indian markets, even as this is a wedding season, have seen lesser buying with the kind of run-up that we've seen in prices. China, in the meanwhile, has been buying a lot of gold. How are you looking at the buying patterns around the globe?
Well, I think if we focus on India, as you said, the fact that the price has hit record highs in rupee terms very recently, and against the backdrop, as you said, of the all-important wedding season, I think both consumers and fabricators are still wrestling with that, still coming to terms with that. So the market has certainly backed off, and of course, you throw into the mix that we've got the budget, just a couple of almost like a week away, really. And there are rumours circulating. Will the government reduce the duty on gold? And of course, that uncertainty, therefore, encourages the market just to pause and perhaps to run with slightly lower stocks. So I think we're certainly having to contend with a weaker Indian market as it currently stands.
Silver, Michael, we've seen strong demand. We've seen investment demand come in as well. The markets also are looking or anticipating a huge amount of industrial demand going forward as well. How are you looking at all of these brackets? Where do you see a major growth coming from?
So, look, Manisha, thank you. We think that the whole green energy transformation is going to help pave the way for silver going forward, and not just in 2023. Look, last year we had a record year for industrial demand in terms of silver, and we think it's going to be even stronger this year. Quite frankly, when you look at the solar power installations throughout the world, as well as the electric vehicle increase in sales and usage throughout the world, not to mention the charging stations, we think it's a win-win. And more importantly, as these economies start to pick up steam, in China, for example, we're going to see hopefully stronger output from China on the industrial side, which will be a win-win for silver as well.
Michael, are there any numbers that you can share with us on what's your sense on the availability, demand growth that we're working with for this year?
Yeah, so, when you look at industrial silver, we looked at about 536 million ounces of silver last year, and we think it's going to run up to about 550. So that's a significant increase. We think there'll be increases in other factors. Investment demand, of course, is one of the key players, and we're keeping a close eye on that. Had a very, very strong last year, of course. And we're looking to India as well. And we put out a report yesterday called Trends in Indian Silver Investment, a very comprehensive report that looks at the 4 key aspects of investment demand in India. And, quite frankly, it's getting a lot of attention. And I encourage your viewers to come to our website at silverinstitute.org and download a free copy of that report.
Just to get a sneak peek into the report, Michael, we do understand that silver buying now is becoming easier in India. It's about physical buying, futures, ETFs, and digital silver buying as well. What trend do you see picking up?
Well, but look, we think that the physical buying is going to continue. And if you look at the years of 2010 through 2022, you're looking at over 730 million ounces of silver were purchased by Indian investors. And when you extrapolate that into 1 year's mine production, last year, that represents about 90% of global mine production. So we're excited about what's happening in India. We're also excited about these new green shoot opportunities to the Indian investor, including ETPs and digital silver. I mean, ETPs came on the market in September of 2021. And now you're looking at about 8 million ounces of silver in those products throughout the country. So that's rather encouraging.
It sure is. But, Philip, this question is to you. And it's not always that we see demand and price movement go hand in hand. I mean, the physical buying clearly is not supportive of where the gold prices are going, but we have seen gold prices totally run up. So what's your sense on what is the kind of demand that we could see for gold? And is it going to be really in relation to the prices? Because when gold prices go down is when the demand goes up.
That's absolutely correct. You've nailed it on the head there. And the fact that, we do think that prices will, as I mentioned earlier, weaken as we move through the second half of this year, we think that will present buying opportunities. And so we are from a global standpoint, fairly optimistic for jewellery demand. In terms of the coin and bar space, it's had an exceptional 2 or 3 years in a number of key jurisdictions, and I think early signs are that will continue. We could see perhaps a little bit more selling back in some locations, but as we've started this year, lead times are still fairly generous for product delivery to the dealers. Premiums are still elevated, be it from Germany or the US. So I think there's enough signs there, I think, to be encouraging from us, Metals Focus, from a supply-demand standpoint.
Philip, what would you advise your investors if they had to put money between gold or silver?
Oh, good question. well, thankfully, we're not FCA approved, so we can't give advice. I think there will be opportunities on both counts. What Michael was saying in terms of where industrial demand is heading, that will be supportive of prices. The fact we've had the end to zero COVID policy in China, again, as Mike touched on as well, optimism around China. And as your last speaker was saying about the where base metal prices are heading as well. So I think there is some optimism in that regard. But as I said, you set that against our view that as market expectations adjust what the Fed will do in our view, then you have that weaker tone in the back end. So there'll be some buying opportunities. But again, you sort of set that against what you think that prices will, as I said, ease back as we move through 23.
All right, and we will watch out for that. But with that, that's all the time that we have on the show. Michael, Philip, what an amazing conversation with both of you on the show. Thank you so much for joining us. That's all that we have in this edition of Commodity Champions. Thank you for watching.